$477,000. That is what a 2.8% investment insurance fee quietly erases from a $200,000 Canadian portfolio over 25 years. Not from a market crash, not from a bad stock pick, from a fee your bank calls a death benefit guarantee. Segregated funds, marketed by Manulife, Sun Life, and Canada Life as investment insurance, are mutual fund equivalents wrapped in an insurance contract. They promise a death benefit guarantee of 75 to 100% of original contributions. That insurance wrapper adds 1.5 to 2% per year on top of the base management fee, pushing total MEREs to 2.5 to 3.2% annually. An equivalent ETF runs 0.09 to 0.24%. Here's the math I ran. A 7% gross market return minus a 2.8% MER leaves 4.2% net compounding in your seg fund. The same 7% minus 0.20% leaves 6.8% net in an ETF. On $200,000 over 25 years, the seg fund reaches $559,000. The ETF reaches $1,036,000. The gap is $477,000, more than 10 years of average Canadian retirement income, erased by a single product decision. The death benefit guarantee, the feature you are paying 2.6% annually for, protects 75 to 100% of your original $200,000. But at Canada's long-run 2.2% average inflation rate, that $200,000 nominal guarantee is worth only $116,000 in today's purchasing power at year 25. You are paying a 2.6% annual premium to protect a dollar figure inflation has already eroded by 42% in real terms. Inside a TFSA or RRSP, 3 ETFs replace every structural function of a seg fund. XEQT at 0.20% delivers exposure to 9,000 global securities with automatic quarterly rebalancing. VGRO at 0.24% holds 6 asset classes including bonds. ZSP at 0.09% tracks 503 S&P 500 holdings. Total annual cost gap versus the 2.8% seg fund. 2.56 to 2.71 percentage points compounding every year. And unlike seg funds, zero surrender charges on early withdrawal. The question the industry avoids: Canada's NI 81101 already requires mutual funds to show a dollar figure cost impact on the cover of every fund facts document. Segregated funds are regulated as insurance products, not securities. That standard does not apply to them. If regulators required the same dollar figure disclosure on every seg fund contract, would $477,000 in lifetime cost be visible before you signed? Full fee calculator, enter your current seg fund MERE and see the exact 25-year dollar cost against equivalent ETFs is on the main channel, link in the description.